have Mr. Alok Gupta from Light Blenders and Distillers. He's the Managing Director and he will be talking on evolving Indian consumer. Mr. Alok Gupta is a highly accomplished business leader with over 35 years of experience across industries including FMCG, retail, alcoholic beverages and technology. He has held senior roles at leading companies such as Dabur, United Spirits, Whyte MacKay, Café Coffee, Essar Retail and Essar Capital, where he has successfully led global markets and transformative growth initiatives. An alumnus of Harvard Business School, Mr. Gupta specializes in strategic leadership and business innovation. Before joining ABD, he was a partner at Essar Capital, focusing on investments in green tech and tech-driven B2B and B2C businesses. His 30-year tenure at United Spirits further cemented his reputation as a leader in the alcoholic beverage sector. A visionary with a strong track record of business growth and market leadership, Mr. Gupta continues to drive change at ABD. For more, you can visit his LinkedIn profile at or the ABD website. Mr. Gupta.
Had some good understanding of where the Indian economy is. So I'm going to skip the part of what you see on slide, but try and sort of decode or how we see what's happening in the Indian economy in terms of evolving sort of consumer opportunities or which way the consumer is likely to go. If you look at the slide, numbers are all sort of known to you all what's happening in the Indian economy. There's a strong middle class. We're moving up in terms of our GDP. What really happened is that one interesting data that got my attention was that household with income of 8,500 to 40,000 US will grow up to 2030, and household with lower income will shrink. And the way we look at this phenomenon is essentially means that our disposable income, and therefore that will continue to accelerate what we are calling as premiumization in the Indian alcohol sector. In the last, I would say about 5 to 7 years, one of the big theme in India has been premiumization, and what we're looking at is a significant value growth over volume growth. So the literage is increasing maybe at a low single digit, but the actual value of that literage or the liquid being sold is increasing. We're also looking at a more socially connected and a liberated youth, which means the moral hazard around alcohol consumption in India is coming down, and therefore newer consuming classes are emerging up. Moving on to our India's position as a global economic powerhouse, I think one of the trends that we are seeing with better disposable income, younger economy, is really quality over quantity. And it again reflects in the fact that the volume growth has been, say, single digit, but the value growth has been high double digit. We are also looking at better literacy. We are looking at, in the connected world, the ability to access information on what the new trends are, and the consumers are sort of looking both at what's getting consumed in India, what's getting consumed outside of India, and consumers are consistently looking for how do you access the product. And I think earlier on we spoke about the sort of growing D2C, which is direct to consumer connectivity across classes. We are seeing a number of orders across all e-commerce sector or D2C sector increasing month on month. When we talk about what's happening in addition to the income, we're also seeing that globally the Indian products are getting accepted. I think one of the things that I see is that generally when we talk about the alcohol space, especially traveling into West, is that there's a lot of curiosity around new products that are coming out of India. There was a time when perhaps Indian products are not seen as ready for the Western market. I think what has really changed in the last maybe 5 or 10 years is I think become better storytellers. I think we always produce good liquid, we package them reasonably well, but we never were good storytellers. Over the last 5 or 7 years, there's a lot of focus in terms of the storytelling. I think another important fact about the Indian consumer today is go global. There's an equal opportunity both for global trends and for local trends. But now what I'm seeing at least is a bias local products. So if you were to look at the luxury gin market in India, today the largest selling gin in India is actually not a global product, but an Indian product. It's a gin that comes out of Goa and it sells at a price point higher than a global product. And we would see these trends across multiple flavors, be what's happening in dark spirits like rum, what's happening in whiskeys. The Indian single malts have started to come out at a better price. In Indian market, when I go to friends' home, I typically open up their bars to see what is inside there. 7 out of 10 homes today have an Indian gin. Gone are the days when you needed an imported gin. So I think this bias for local brands, I think, is growing. If I take another category, which is sneakers, which is sort of a global phenomenon, you will find that brands like Gully Lab, right, is growing in the Indian continent. Earlier, one would only think about wearing the new Nike or wearing the new Adidas, but there's a lot of opportunity for local brands. I think the bias for local brands is only becoming stronger day by day. Another shift that I see really is that, which is from Made in India, which is something that Prime Minister Modi spoke about over 10-15 years back. But I think it's moving to Made by India, and somebody was asking me what's the difference between Made in India and Made by India. It's clearly India from being a manufacturing economy now transition to become a brand economy. So when you say Made in India, it just talks about where it's produced. When it is made by India, essentially globally anywhere in the world, you have to pick up a product that says Made in India. So if there's a single malt out there, there's a gin out there, there's an Indian rum out there, and it says Made by India, today it's, it's okay, hey, let's give it a shot. So I think this transition from a manufacturing economy to sort of a brand economy is a very interesting transition. Also, if we look at what's the size of the global alcohol trade, the size of the global alcohol trade is about $135 billion. India exports about $400 million of spirits out of India. ABD, which is the apex body in terms of, we fall under the agri industry, agri vertical. They are now working very closely with the Indian industry to take this $400 million export to $1 billion. So program has been put in along with the industry that how do we take exports out of India from $375 million to $1 billion over the next 4 or 5 years, and many specific initiatives have now been put in place. So I think this whole transition from Made in India to Made by India and a lot of support coming from ABD and the central government will really allow the Indian brands to flourish. This is a very interesting one for me personally. I think what we're seeing with the Indian consumer is there was a need to just consume what I call as trusted brands. Brands that have been around for a very long time. There were safe choices. What we're now seeing is that consumers are looking for what I call as exciting brands. So I'm happy to give a shot to a new brand, and that is making the life of maybe perhaps established legacy brand a little more difficult, because it's about creating, it's about being able to offer exciting experiences. In the alcohol space, what we've seen now is flavored products could be as much as 30 to 40% of the main products. So if you look at rum, traditionally when we talk about Indian rum, it's been about dark rum. Today 40% of sale comes from flavored rum, and rums flavors like mango chili. So what's happening is that Indian consumers are now starting to look out for interesting products. If that experience does not come from a trusted brand, I'm happy to try a new brand, and if I like it, I'm going to come back to you. There's I think Raji spoke about, or maybe somebody else spoke out of the fact that there are 30 official languages. One of the languages is Haryanvi, which is a language spoken in North India. There's a very interesting rap song that has come from Haryana, which has the word tequila in it 17 times. Now what makes it fascinating is that when the song is being heard by the younger audiences, as we know, rap really is, gets the attention of the younger audiences, that consumers that start wondering, what is tequila? Pull out your phone, type it, figure out, and it turns out to be an alcohol. And then the consumer goes to a shop and says, "Bhaiya tequila chahiye." Goes to the shop and says, "Hey, can I try tequila?" So I think really the interesting opportunities I see in India is that from both sort of a global outlook, that means they are to try global flavors like tequila, but equally interesting is mahura, which is a spirit that is made from a flower. If you go back a few 100 years, it is made in villages out of a flower. It's still made, right, as a form of country liquor. But today there's a new brand called Six Brothers Mahura, which has been launched, and it's just about 5,000 Indian rupees, roughly about $65-70 for a 750 ml bottle, and consumers are wanting to try it. When you travel all across the globe, interesting thing is that when you go to Germany, you pick up a bottle of grappa, you go to Holland, you pick up a bottle of Schnapp. I think that's a big opportunity for India, is to create its own native spirit, whether it's Mahura, which comes from local villages, or whether it is Feni that comes from Goa, or whether it is going to be a toddy that comes from Kerala, made from palm. Will be an interesting one. We are starting to see the Indian startup industry to create brands and to create right stories. We also have Indian agave, and there are two interesting brands called Maya Pistola and Desmanji. And we have Indian agave. These are not agave where it's getting imported from Mexico. Actually, the cactus is grown in India, it's distilled in India and bottled in India. So there is a fascinating sort of a development that's happening in the Indian market, and I call it from tequila to Mahura. Another important one is really cocktail to sipping. A traditional way of enjoying an alcohol in India is really, you take a glass, put ice in it, put whiskey in it, put water and soda, and you glug it. There are two big trends that are emerging. One trend is what I call as cocktail. If you were to walk into any bar or anybody's home, cocktail is a big thing. Cocktail not as in terms of a Bloody Mary or a Tom Collins. These cocktails have to be beautiful and beautiful looking. They have to have nice bright colors. They have to have cherries in them. They have to have burnt orange in them. They have to be served in a glass of a certain kind. So no more the tall glass or the highball glass. So cocktails becoming very interesting, both in terms of consumption and our home consumption. And I think the second trend that we're seeing now in the Indian market is sipping. It's largely happening in the largest cities. We used to sip a brandy, we used to sip a cocktail, but today you have sipping rums, sipping Indian whiskey. So sipping is becoming a very, very interesting phenomenon, and I think it's all to do with how the palate has evolved over a period of time. Last point, if I may take up, is that I think distribution of alcohol spirits in India is fairly mature, right? The penetration is across all the 30 states. Though the number of retail outlets are limited, what we are now starting to see is even in tier 2 towns, demand for premium alcohol, for luxury alcohol, and for newer alcohol is coming up. So as distribution gets more and more geared up, backed by manufacturing, local manufacturing, I think we will see a lot more demand coming from tier 2 towns. This slide really talks about the fact that from an alcohol perspective, while the world is slowing down, in India, the growth consumption continues to be higher than the rest of the world. Again, the volume growth are lower, but the value growths are significantly higher. In terms of the total beverage alcohol market, India loves spirits. Over the last 30-40 years, while there's a lot of talk about whites as a category, but 65% of total spirits consumed in India is whiskey, another 30% is rum and brandy. So we are largely, we like dark spirits, so 95% of consumption is in whiskey, beer, brandy and rum, and balance 5% is in whites, which is all tequila, gin, white rum, and everything put together. Will this trend change? Will India consume more white spirits? Well, over the next 10 years, unlikely. I think we just like our whiskeys, and therefore we'll see more and more work being done in that space. One of the interesting facets I think about now the Indian alcohol space really is the fact that the global markets are opening up. Again, data point that I shared with you earlier, the global trade is about 135 billion US, India does about 375 billion of exports, growing at an incredibly fast pace. And I think it's for the first time that we're seeing the central government coming in and actually starting a dialogue with the industry. We recently had a policy day about 10 days back in Delhi, where the chairman of ABD came in and spoke to the entire industry, saying how can we take the export of Indian spirits from 375 million to about 1 billion. I think it's a doable target. 2-3 other data points that we can quickly look at. Till about 10 years back, exports were limited to about 8 or 10 countries, largely where the Indian diaspora was, which is UAE, bit of Africa. But today, the premium liquor and premium spirits are now available across 40 countries, including the US. A lot of Indian malts, a lot of Indian gins are now available. Before I move on to talk a little bit about my company, like the distillers, we put together a short video. It's okay with everybody, I'm going to play that out. Well, this is a quick snapshot of our scorecard. We are the third largest spirits company by volume. We have 89 active brands. We have 36 manufacturing locations, 2 distilleries, and balanced bottling units. It's a fairly asset-light approach. We are available in 90% plus of addressable outlets. We export to about 22 countries, 4 million brands. Officer's Choice, this is our flagship brand. It's the third largest selling whiskey in the world. Iconic spirit, recognized as the largest and the fastest growing spirit brand across all categories. Last year revenue, 9-month revenue for this financial year, that is $719 million. Cases sold is 24.5, gross margins close to 40%, and ROC about 50%. I will perhaps just sort of race forward from here. I think within India we have a very strong brand recognition. Our manufacturing facilities are strategically located. Those who are not familiar with the industry, in India the business has to be is about producing locally and selling locally. If you were to produce in a state and sell to another state, you have to pay export duty to the state where you're manufacturing and import duty to the state where you're selling. I think the way to look about the Indian alcohol market is that there are 30 different countries, and each country is a PL in itself, and therefore you need a fairly decentralized manufacturing ecosystem which is both sustainable and scalable. We are available across 93% of the outlets, and I think Rajiv earlier spoken about the management team. I'd like to believe we have a fairly experienced senior management team. We've already seen the video, so I'm going to skip this part. This is really where our manufacturing base is. Alcohol in India is not about scale. It's not about putting up one large unit and bottling and shipping it out. It's about having local manufacturing. So right from Jammu and Kashmir, which is the north, down to Kanyakumari, and from Tripura, which is the northeast belt, close to the China border, all the way down to Maharashtra, we run manufacturing units. Some of them are owned by us, which are strategic and large, and the other are done through third party, which keeps it asset-like. You don't have to necessarily put in capital because bottling capacities are fairly well. Looking at the distribution, we operate across all 30 states. Our total reach is about 79,000 outlets. We have 12 support offices. We have roughly 500 people feet on the street. This really allows us to launch new brands with greater ease because we have the manufacturing and distribution in place. The last year has been all about building up the entire portfolio. Let me just sort of skip to the next slide, which will give you a sense. We traditionally operated in a price band which was sub $10 for a 750 ml bottle, which is largely Officer's Choice Blue, Iconic, and Sterling Reserve. When we look at the India consumption space, of the 400 million cases sold last year, 3% of that volume, which is about 12 million cases, accounts for about 20% of the industry profit. So all the brands that you see are given in green is that price band, which is roughly about, let's say, sub $20, say about $18, $20, all the way to about $60. So this is only 3% of the industry, but 20% of the industry's profit. A large part of our work has been to consolidate our portfolio, which is across all flavors, from a gin to a rum to a whiskey. And the whole idea is to try and offer products that are exciting, which fits into sort of the mindset of the young consumer. They are looking at newer opportunities. Those who have been to India recently, or those who live in India, if you ever go to a nice bar in India, count the number of bottles on the shelf, I would be surprised if you come up with a number less than 150, which means that if you look at unique expressions, right? So gone are the days when you could run a bar with 2 malt, 3 whiskeys, 1 gin and 1 tequila. You need to run your bar with a fairly good rate, because consumer could well walk in and say, hey, so what's the new vodka in town? What's the new tequila in town? And the bar needs to be geared, otherwise you are a particularly bar. So I think it's all about range, it's all about excitement, and that's really where we build our portfolio out. The other work that we've done in the last year is really strengthen our backward program in terms of our raw material security. Let me just take you an interesting slide. Before I do that, just a quick landscape on where we are on export, international revenue, exporting to about 22 countries. We were traditionally strong in UAE, but for the last 4 quarters, a lot of work has been done in the African subcontinent. We believe that we have both a quality and a price edge as far as Africa is concerned, to be able to offer brands that are sort of benchmarked like any other European brand, but at a price that is significantly better. Africa also offers a significantly better margin structure. That's good. The challenge is largely to do with your receivables, and we worked on an insurance program through a sovereign insurance program through the ECGC, which is Export Credit Guarantee Corporation of India. Let me just go to the last slide, which is sort of a sum up on what's kept us busy post our IPO. There are four broad themes. The first thing is really in terms of the portfolio. We've sort of recrafted, recreated our portfolio to fit into what we believe is the current consumption over the next at least 5 years. So the portfolio is now in sync with what the consumption patterns are, to be able to operate in a profitable value of sub $10 a bottle, but also to be operate in that 3% market, which is 20% of the industry. From the supply chain side, our focus is on ENA, that stands for extra neutral alcohol. Each 9-liter case consumes about 4 liters of ENA. India has a very strong ethanol blending program as part of their carbon footprint. Therefore, for the last 4-5 years, there has been a challenge in terms of not so much availability of ENA, but in terms of the margins. We are going from a 1/3 make, 2/3 buy to 100% make. That's one investment that we're doing. Malt is a very big story out of India. We consume a lot of malt, both as a raw material, and we do not have a single malt as of now. We are setting up India's first single malt distillery. This allows us to go from 100% buy to 100% make, and it also allows us to launch a single malt in year 2030. PET for our flagship brand, Officer's Choice, where a lot of work has been done in terms of getting our gross margin out. We have successfully moved from a glass format to a PET format, and we are now moving from 100% buy to a 75% make, 25% buy. This we are putting up in India's largest market, which is Telangana, and essentially we produce in a complex and we ship into the bottling complex using a conveyor, because as we all know, one of the biggest costs in PET is really transport, because you're shipping air. So this really gives us a significant edge in both in terms of securing the raw material, but more importantly, impacting our margins. Till last year, our gross margins were 37%. We were behind competition. Post IPO, a lot of focus has been on getting our P&A portfolio up and running. Very happy to share that gross margins are consistently north of 40. Beer parity is between 42 to 45. Most of our peers are through with their capex program. We've just got started. About 2 to 3 years from now, when we have completed our capex program, we are quite confident that we should sit at the top end of the gross margin. On EBITDA, we were 7.5% last year, big catch up to 12.3. Industry parity is 15%, on back of the fact that we are currently at 12, and the margin that will flow from our capex program, we are of the view that we should get to industry parity. The plus next to 15 really is the fact that a lot of work has happened on our portfolio. We've not baked into our numbers. Post-listing, governance has always been an important area, but post-listing, governance and culture framework has been a big space, and we're working with best advice in the market. We brought Crystal and Whyte helping on our risk and governance practice. So this really is one slide that captures us where we were last financial year, where we are as of quarter 3 FY25. Of course, can't talk about quarter 4, and what is sort of way forward for us in the next couple of years. So thank you very much for your patient hearing. I know the energy levels are a little low. Unfortunately, we can't blow a bar here, otherwise we would have got everybody invested. So thank you so much. If there's a question, happy to take.
Thank you for the presentation. That was really interesting. I'm not too familiar with the beverage industry, but I was curious, can you describe the industry structure of the spirits? I know you said you're the 3rd largest in India, but maybe just talk about the industry structure in India around the spirit industry, how you see that evolving over the next 3 to 5 years, and why, maybe some more detail on why the margins have been below industry levels.
Sure. So India's the structure is fairly complex. We are a state subject, which means each state gets to decide as to what the policy is. So essentially, if one has an aspiration to be a pan-India player, we need to understand the policy at each state. But broadly, there are 3 routes to market, what we call as government market, where the government is the primary buyer. So let's say in a state like Telangana, which is the southern large state, there is only one customer we have, that is the government of Telangana. That's one kind of market. The second kind of market is what we call as open market, which is a typical, you set up distributors and distributor service both on and off premise. And the third set of markets are what we call as wholesale or concession markets, where government bids invites bid for a pin code cluster. So typically, either individual or group of individuals will bid for that area, and they are wholesalers. And therefore, for that pin code, we can only sell to that wholesaler. So one needs to understand that. In addition, there is defense. So we have 2 sub verticals. One is CSD, which is canteen stores department, but largely for Indian Army, Air Force, and Navy, and there's paramilitary. These are 4 route to market. So that's the structure. Every drop of liquid is accounted for. Significant initiative by the government in terms of tech processes, ease of doing business. Paperwork has been removed. All the liquid has to be reported. So governance, compliances is still at the heart of how you do business. It's complex. It is hard. But I think having been around for 35 years, that's one thing that now we have understood. The market is about 400 million cases. This is a nice fact number. 2/3 of this is whiskey. Traditionally has been for the last 50 years. 30% is rum and brandy, which is again a dark spirit. So 95% of total spirits sold in the country is dark, and about 5% is white spirit. Have the saliences changed over the last 30-40 years? The answer is no. But one change that is quite evident is movement of the price change. So across all flavors, we are seeing that consumer is sort of moving up the price point and wanting to consume better. All right. There are 4 national players, 2 of which are multinational, Diageo and Pernod. We are the 3rd largest by volume, and Radico. Between the 4 of us, which are the only ones who have a national player, there's a bit of presence by Beam Suntory, a bit by William Grant's, but they are sort of more regional players. Larger competition, therefore, comes from regional players, right, and not from national players. So that's about the structure of the market, the size of the market, what's happening within the market. One interesting trend that I've spoken to you about is that roughly 3% of volume holds about 20% of industry profit. Also, this 3% volume is growing at a significantly higher rate. Our view is that this 3% will double in the next 4 years, and therefore will command almost 1/3 of the industry profit. So to be able to meaningfully make money in Indian market, you need to operate in a profitable belly of the market, which is sub $10 a bottle. But to make a higher margin per case, you also need to create a portfolio in that about 12 million cases. So everybody's trying to do that. So you'll see incredible number of new launches that are happening in India. The last point, if I may cover, is India and beyond. Traditionally, Indian alcohol marketeers have looked at growth to come from the Indian landscape, large population, younger, high disposable income. I think everybody has started to look at what we can do in international market. We are the largest exporter out of India, largely in the Middle East area, but over the last 2 years, there is a complete transformation. There are 3 large growth levers here. One is the Indian diaspora, second is Africa, and third really is on back of luxury brands opening up some of the Western economies.
Just real quick, I have one more. On like the branding aspect, I know you said you're talking more about building the made by India and so forth. Can you talk about that the marketing element? I mean, social media. Like I know in this country you have a lot of Hollywood actors that'll start their own spirits brand. You said that there's a lot of new started spirits, I guess, in India as well. Like how is that? Looking to kind of go find your business on social channels and so forth. And thank you.
So India is a media dark country. By law, advertising of alcoholic beverages is not allowed. However, Instagram.
Part of my ignorance.
No, that's okay. That's the reason we are here. However, Instagram as a channel does allow you to sort of do some meaningful work on the brand side. So traditionally, there are three sort of marketing channels available in terms of building a brand. One is clearly on-premise, where consumer is intimate in terms of gets intimate in terms of the new brand trial. You can have a brand ambassador at the on-premise to talk about your liquid. I think one important thing that has changed post-COVID is that instead of just drinking out, a lot more consumers are drinking at home. So on a given weekend, you just invite friends over. So community marketing is becoming extremely important. It's a new one. We're all trying to figure out what do we do. The high-rise buildings in at least some of the largest cities is helping it, because in one high-rise condo there could be 500 families. So if you were to get into that condo, you can talk to a lot more consumer. And third is in terms of the social media, which is largely Instagram. The access is available, but otherwise we are a media dark industry. From the point of view of celebrities, what George Clooney has done with Casamigos, or Ryan Reynolds is doing with Aviation Gin. In India, we are seeing both models. We, for example, have partnered with Ranveer. Ranveer he's the #1 superstar in India, And we have sort of followed the model, which is a more, George Clooney model, where he comes in as an equity partner and gets involved in the business. How the other sort of business model of coming in on a single brand basis. So we have cricketers like Kevin Peterson, who just launched Indian whiskey. We have the Caribbean cricketer. Help me with the big boy from West Indies. Chris Gale. He's just launched a new rum. So I think Ajay Devgan, who's another film actor, Bollywood actor, has just about to launch a new whiskey. Sanjay Dutt. So yes, we are seeing a lot of celebrities from Bollywood, which is the Indian sort of equivalent of Hollywood. But what is interesting is people from the sports fraternity coming and launching their brand. And it's important why? Because it was always frowned upon, alcohol and liquor, like especially in the Western Hemisphere, and that's part of a larger opening of the society and developing a lot more tolerance and acceptance towards alcohol in India. But it's happening.
Thank you.
Thank you. All right. Thank you so much for your time. Much appreciated. Yes.
Thank you for presenting. You said, what are you? I mean, you don't have any beer or wine under ABD?
No, we do not.
I didn't see it. That's why.
No, you're absolutely right. Correct observation. We do not have any beer or wine.
Okay.
If you were to look in India, the supply chain, right from raw material all the way up to distribution, is very distinct for a beer and a wine and for an alcohol business. So in India, every company sort of focused on building a very efficient supply chain. Wine will need grape as an example. Beer will need barley.
Yeah, wine, I do understand, but why not beer, right? Beer is
very different, very different supply chain. For example, in case of alcohol spirits, it's largely large factories to do distillation and last mile bottling to be done. In case of beer, you need really a large scale plant. So the capital structure is very different. So synergies there are very few synergies in this business in India. That's why everybody's sort of focused on doing what they do well.
So what are your gross margins and net margins?
So gross margins are about 43%. EBITDA margin has improved from 7.5 to 12.5. We're looking at getting to industry parity of 15% over the next 2 years.
How do you compare with your number one, number two? You said number three, right?
Yes. So number one is Diageo in India, followed by Pernod. We are number 3. So we are comparable on Diageo, which is United Spirits in India, Pernod Ricard, and followed by us. So on gross margin, we are at parity with any of our competitors. On EBITDA, we are about 200 basis points behind them at this point of time, but we will catch them soon.
What did you say second?
Second is Pernod Ricard, what used to be earlier Seagulls.
Say that again.
Pernod, P-E-R-N-O-D, Ricard, R-I-C-A.
Oh, Ricard.
Yeah, Pernod Ricard.
That's global, right?
Yeah, Chivas Regal, Absolute, some of their well-known brands.
Thank you.
All right, thank you. Thank you very much once again. Thank you for listening.